Everybody, welcome to Talking Real Estate. It's Champions Real Estate Team here at Berkshire Hathaway Home Services Ambassador Real Estate Company. My name is Mark Wehner, the second team leader here at Champions Real Estate Team. So every Wednesday we jump on here over the lunch hour or shortly around that time frame and get you caught up on what's going on in the real estate market in the Omaha metro area. So let's jump in and get straight to our graphics that we have here. So over the last week, we've had 520 new listings go live in the Omaha metro area. We had 381 new contracts written and 540 happy new homeowners. So that 520 new listings, that's up. That's the largest number we've had since about a month ago, right after the 4th of July holiday. So I think we're starting to see a little bit more pickup. The market's kind of normalizing a little bit. We're not as intense as it had been a couple months ago. I'm still seeing pretty good traffic in open houses and things of that sort. Showings, we're not necessarily seeing the 10, 15, 20 showings in one day. I think a lot of people right now are obviously back to school. Today is first day, I think, for Millard and some other school districts out there. But so happy first day of school to them. But so as everyone kind of gets normalized with their schedules and things of that sort, I think the home buying aspect of it will pick up as it typically does around this time of year, between now and Labor Day, while the weather's still nice and then want to get in before the holidays. So still seeing a lot of activity in that regard. So let's jump into the kind of 30,000 foot view here. Let me pull it in quick. So 30,000 foot view in the Omaha and Lincoln MLS. So we joined, the two MLSs joined together a couple of years ago. So now we have access to both sides of it. So combined, we have exactly, when I looked at it a little bit earlier, we have exactly 2,300 homes. So it's kind of nifty to hit that 0-0 mark. But in the Douglas-Sarpy County area, in the Omaha metro area, kind of a little bit smaller, more that the core area at 1,324 active listings. And then existing homes, so the ones that are not new construction, we have just under 600. So that's up, about threefold from earlier this year. And we were happy just to be in the, get above the 300 mark. So new construction, seeing some of that tick up a little bit, about 729 months of inventory is at 1.3. So what that means, if people always ask me, that basically means if no more houses came on the market after today, we basically run out of houses in about just a little over a month. So average sale price is up 13% from just 1 year ago in July time frame. So up to that side of it. I was just kind of playing around with numbers looking earlier today, kind of the 5-year time span of it. So from 5 years ago, we are up on the average sold price, up 51% on the average sold price. So if you bought a house 5 years ago, on average, it's gone up 51%, which is a great return on your investment. For existing homes, it was up 55%. New construction was just up 37% on those average sold prices for those new construction. So it's kind of a big picture of what's going on in the market. I think rates are kind of saying they're pretty steady right now as far as interest rates. Russ Williams wasn't able to join us today, but it's still obviously a great time to buy. Rates are obviously a little bit higher than what they had been a couple months ago. So, we talked on in previous segments, marry the house, date the rate. So that's something to still get in there as we're seeing some of those average sold prices, up 50% just from 5 years ago. We're up 13% from last year. I don't necessarily see we're going to, see that huge jump going forward. I think we're going to kind of normalize and we have a little bit less intensity that we've seen in the last year and a half or so. But I do see the demand for housing still staying strong for both buyers and sellers. So, getting those houses on the market, finding a house before those prices go up in that side of it. So I think it's still a great time to buy and sell real estate if we can help you in any way, shape, or form, or even if you're thinking about doing the real estate investment side of it. Think about if you bought an investment property 5 years ago, you're up 50% just on the appreciation of your house, not counting what your tenant has paid down on your mortgage and your equity has grown. And then a little bit of cash flow that you get month to month. So those are some things that we're happy to share with you, just different ways to build your wealth in that manner and using real estate as one of those vehicles. So we'd love to chat with you. Feel free to reach out to me at 402-672-7670 or any of our platforms, social media, any of that kind of stuff. We're happy to help you. Go over to a Zoom, meet you in person, anything that we can do to kind of get a good game plan for you, whether buying, selling, or even thinking about real estate as an investment side of it. So some of those things that people don't know on the real estate side or investment side of it, you can hire a property manager, and they can kind of take care of all the day in and day out stuff. You can sit back and kind of watch that appreciation, and the cash flow in that regard. So there are, good advantages of that you don't necessarily have to deal with the tenants day in and day out. You can have somebody do that, and outsource that, and have somebody else take care of that for you. So, but anyways, happy to chat with that. I think it's kind of a short video today. Appreciate everyone jumping on as they do every week. If you are looking for homes, jump onto our championsrealestateteam.com website. You can check out all the active listings that are out there in the Omaha metro area. Got a little video on there for you. So you can also check out our home buyer guide, home seller guide with regards to that. So love to chat with you. If you have any questions, feel free to reach out, and take care and have a great rest of the week. And we'll